Listen, whenever you're trying to get funding from these financial institutions, you have to give the bank something. This means you have to be in position. Now, this can mean your personal credit needs to be in position. This can mean your business credit profile needs to be in position. This can mean having a good relationship with that financial institution in order to get their funding products. So building that rapport with the banks, so you need to be in position to do that. So this can mean building a strong business credit profile. So my point is you have to give the bank something, right? You have to create a win-win situation. See, most of you are not in position when it comes to getting funding. So you're wondering why you can't get the funding that you need in order to start, grow, or scale your business. Now, if we break that down, in this video, that's exactly what I want to do. I want to break this down as far as, hey, if I don't have this, then I need to have this, because I can't walk in the bank empty-handed, because I need to build a rapport with them that they know, like, and trust me, so they can see that my business and me as a business owner, I'm not a high-risk individual or a high-risk business owner whenever I'm trying to obtain some type of funding products. So that's really important. So, for example, if you have good personal credit, yes, in order to get business funding, in order to get financial products from these financial institutions, you need to have good personal credit. So if we break down what good personal credit is, meaning your FICO score needs to be at least 680 or 700 or above. And you also need to have a good personal credit profile. Believe it or not, there's people out here with 750, 780s credit scores, but can't get funding because their credit profile is not in position. So when you go to my score IQ, when you go to myfico.com or Experian.com and you're looking at your FICO score, not your Vantage 3.0 score like a Credit Karma. We don't want to do Credit Karma, again, for various reasons. They don't give you your FICO score. They don't give you all the data that you need. And they also straight out lie to you, telling you you're approved for different products and you're not. Credit Karma is like a broker, but I'm not going to get into that. But pull your FICO score. Now, you can go to different banks, different financial institutions to get your FICO score, like a Wells Fargo give you your FICO score, although they don't give you once. Credit reporting agency, you need all three to see where you're at, because we should know by now most banks report to different credit report agency like Experian, TransUnion, or Equifax. You need to know which banks report to which bureau. That's really important. So I have a free lender list that you can see that information down in the link in the description if you want to get your hands on that. But you have to have good personal credit. So once you pull your personal credit profile, and you can do it for $1 for a free 7-day trial, I highly recommend you do that. Pull your personal credit profile, look at the score, but also look at the data that's on there, because that's going to determine whether or not you are in position to get the funding products like an unsecured business credit card with 0% interest. I can't stress enough how important that is. Imagine writing yourself a loan, let's say for $20,000. You go to a Chase Bank, they give you an unsecured business credit card, stated income. This means you don't have to prove that you're making what you say on that application. And that's not considered bank fraud. So don't give me that. You're not lying. All you're doing is projecting your income. So if you're going to assume that you're going to make $100,000 on that business at the end of the year when it comes to your business, you can put that on that application. Right? So that's called projecting your income. It's called stated income. This means they're not going to check to see if you're actually making that money in the bank. Now, you have to be strategic about it. So that's a whole nother video by itself. I made plenty of videos on there. You can see stated income, projected income, etc. But having your personal credit profile in position, this means low inquiries. This means paying your bills on time and over a period of time. Essentially, that's all credit is. Do you have the ability to pay your bills on time and over a period of time? That's what credit is in a nutshell, personal or business. It's all about the risk factor. So if you are in position when it comes to your personal credit profile, you have all the data points, you have a revolving line of credit. Revolving and installment is two different types of trade lines. So most of you think that if you go get a car note, if you go get a mortgage, you get things of that nature, that you are helping out your personal credit profile, but having a credit card is way more important than having an installment loan, like a car loan or a personal loan on your credit profile. Why? Because banks like to see that you can manage debt. So having a revolving credit card, which is a credit card on your, or a line of credit on your personal credit profile, is way better than an installment loan. So don't close your credit cards. Stop closing your credit cards. Now, there's a point where you can close your credit cards. Again, you have to know what you're doing. So you have to do it in a strategic way. But my whole point is have your personal credit profile in position. Make sure you have a high limit credit card on there, like a 5,000, 10,000. Why? Because banks like to do something that's called comparable credit, where other banks will look at so when you're trying to get funding, let's say from a Chase bank, Chase is going to look at your credit profile to see what other financial institution lend you any type of funds. So let's say they see American Express on there. Remember, banks are very competitive. They look at Chase is looking at American Express. Okay, American Express gave this individual $8,000. Okay, we want to match that. We want to give them $10,000 or higher, or we give them $8,000, something comparable to that line of credit, because that line of credit shows banks that you can manage debt. So remember, banks are very competitive. They like to compete with one another. So having a prime lender like a Chase or American Express, it'll influence other prime lenders like a PNC Bank, choose it to give you funds. Now, if you go with subprime lenders, which I talk about in my other video, now you open up the door for other subprime lenders. If you don't know the difference between prime and subprime, go watch my other video and I'll explain the difference between them. But you want to focus on prime lenders, not subprime lenders. Prime lenders is when banks have it's more prestige banks like American Express or Wells Fargo, not lenders that give you a line of credit even if you have bad credit, because now you're going down that road where you're constantly just getting subprime lenders and it's not making your personal credit profile better just by getting subprime lenders. Okay, so that's enough on personal credit, right? So just don't focus on your personal credit profile. You want to focus on now after you, let's say your personal credit profile not in position, focus on your business credit profile. Build trade lines that's gonna get you in position to get the bank's products. Because if you put different types of trade lines on your business credit profile, like I always talk about vendor trade lines, supplier trade lines, financial trade lines is what I like to focus on. So I do like to put vendor and supplier trade lines, but if I focus on financial trade lines, like Security Bank or like a lease loan or like an inventory loan or anything that's gonna show that I can manage debt, that I can manage money, then other banks or other businesses is gonna look at that and say, okay, this business can manage debt. So now we wanna lend to this business because this business proven that they can actually manage debt, they can manage funds. So focus on financial trade lines, like for example, get a secure business credit card or a business loan. Those are, or term loans or a lease loan. These are financial trade lines that other banks care about when they're looking at your business credit profile. So if you're not in position on the personal side, now really quickly, going back to the personal side, most people say, well, London, I don't want to leverage my personal credit because I want to keep my business and my personal separate. Well, that's exactly what you're doing. Those business accounts, although you're leveraging your personal credit, those business accounts do not report on your personal credit profile. They only report on your business credit profile, which is really important. All right. So if you're not in position on the personal side, you can always build your business credit, but get your personal credit in position. I don't care how long it takes, get in position. And next thing, you also want to show banks revenue. So again, we have to give the bank something. So if it's not personal side, we don't have a business credit profile, strong one, maybe we have business revenue. Maybe we're making $10,000, $20,000, $30,000 a month, or even $100,000 monthly in our business that we can show to these banks, and they'll give us, extend us a line of credit. They'll give us a term loan. They'll give us a business line of credit. They'll give us some type of funding that we can not only start, but grow or scale our business. So if you have that revenue, your personal credit doesn't have to be A1. Your business credit profile does not have to be A1, because banks see that you have the ability to pay them back. That's based off your revenue. So having a good bank rating number, or we're talking about bank credit, did you know bank credit is much better than building business credit? So again, I have a whole separate video where I talk about business funding, business credit, and bank credit. These are three separate concepts, but they tie into one another, because again, name of this video, the whole point of this video is we have to give the bank something in order to get something from them. create that win-win situation that I'm talking about in this video. Are you tracking? All right, so now bank credit, this means, in a nutshell, it just means how much money are you averaging in your bank, in your business. Is it 10,000? This totally different than projected income and stated income. Totally different. This is what you're making. So if they check your tax returns, if they check your bank statements, if they look at your paycheck stubs, if they look at all these financial records to see your revenue that you're making in your business. Also on the personal side, because not only you can use your business revenue, but you also include your personal revenue. So this is why you want to have something like ADP, which is a payroll processing provider that allows you to create or write yourself a check that you're getting from your business. So essentially it's just payroll. So not only you will get your business revenue credit, but you will get personal credit. This means they'll see that you're making money in your business on the business side and you're paying yourself. So that's double the revenue. You tracking? That makes sense? That's double the revenue. So you definitely want to have a payroll provider. That'll be in the description below too. ADP, I highly recommend you're signing up with ADP. They are the #1 payroll provider in the US. So definitely start putting yourself on payroll immediately, because technically you're not in business until you have a business checking account. I don't care if you have an LLC. If you established your LLC 2 years ago, if you don't have a business checking account, you're not in business. That's just the name of the game, right? Okay, so again, we have to give the bank something. Maybe we have business revenue, maybe we have a good business credit profile, maybe we have good personal credit, maybe we build a relationship with that bank. So here's the power when it comes to building a relationship. Just 3-4 days ago, one of my clients, he's making, I would say, $500 a month in his business, and that's being generous. Now, he does have a good rapport with Wells Fargo. That's #1. He's been banking with them for, I think, about 2 years. #2, he does have a good personal credit profile. He does have a good personal credit profile. His debt to income ratio is low. His debt to credit ratio is low. He paying his bills on time over a period of time, so he have a good payment history. His hard inquiries are low, so he have revolving and installment accounts on his credit profile. However, he's not making any business he's not making any revenue in his business, but he have a good rapport with Wells Fargo. He have a good personal credit score. So what happens? He went to the bank, opened up a business checking account. He only had a personal account with them. But when I told him to go to the bank, open up a business checking account, what happened? Immediately, now, if you don't know about Wells Fargo, they have lines of credit right now. They don't have an unsecured business credit card. They used to, but they revamping it. They have business lines of credit. So he went there, he got a business line of credit for $15,000 without showing any revenue or without showing any documentations for his business. So he got that line of credit just off the strength of having good personal credit and having a rapport with them. He was able to get a $15,000 business line of credit in all but 30 minutes. Imagine what you can do with a business line of credit. So that's the importance of having that relationship. All right, guys, I got to go. As you can see, I'm out here enjoying myself. That's my time. But put yourself in a position, give the bank something, create that win-win situation, and you can be like one of my clients where you don't have to show any documents. You just walk in the bank, get a $15,000 line of credit. Of course, you got other unsecured business credit cards too as well, but a business line of credit is like the top tier, right? All right, so guys, that's my time. See you on this video. Peace out. Talk to you soon.